So welcome back, friends. There is a common saying that markets can remain irrational for longer than you can remain solvent. I am referring in this case to a specific group of stocks which have performed exceedingly well. And in fact, Pradhan Mantri ji and Defense Minister Rajnath Singh also had a mention of this in the Parliament. With the amount of import substitution in defense that is going on. And now India is in fact beginning to export to certain parts of the world, such as Malaysia, Philippines, is really something that has taken the investor population by great surprise. But people have made money hand over fist in HAL, in Hindustan Aeronautics, in Mazgaon Dock, in Mazgaon Dock Shipbuilders. You have the Garden Reach and many other stocks, Cochin Shipyards. Beyond imagination, 4 to 5 times it has gone up in just 6 to 8 months. So fantastic rally in the defense stocks, and naturally that concern is there, that is this a good time to invest in these stocks for the long run or even for the short run. See, as far as short run is concerned, yes, they definitely do present decent opportunities. For example, we heard that HAL is to participate in the Defense Ministry REP for 156 LCH Prachand helicopters, 90 for the Indian Army and 66 for the Indian Air Force. So it is good. The import substitution is going on. This is good news. And Hindustan Aeronautics priced at 55.46 still represents good value on the back of these new orders that they are getting, new bidding that is going on, right? So there is a strong policy support from the government for the sector. The push for indigenization has never been better, and order books for the defense companies are also very strong. So should we go and buy for the long term? Still you can go Mazgaon Dock and Cochin Shipyards. They are full of order books. Now, I would like to say that yes, short run you still have some opportunity. However, we may hit a roadblock sooner than you may imagine. Okay, and while we may have made some good strikes in defense technology, the fact that we are still left holding a stiff import bill, right, that indicates that there is a room for some discomfort. Okay, and technology is not completely disseminated. You don't have a complete hold over all the technology. Otherwise, you would still not be going for the Rafales manufactured by the French defense company Dassault Aviation for strategic purposes. So that means to say that yes, there's a stiff import bill which India still has to incur, and it will have to incur. Look at the terrorist attacks which are still going on in Jammu and Kashmir. Now, in the fiscal year just passed, Dassault Aviation posted a revenue of $5.19 billion and a net profit of $974 million. Now, so $5.19 billion, Dassault Aviation posted revenue. Now look at Hindustan Aeronautics Limited. It has posted a revenue of $3.67 billion and a net profit of $921 million. So it is comparable. It is smaller in size, but comparable. However, you find that Hindustan Aeronautics Limited, or HAL, trades at an enterprise value, or EV, of a staggering $41 billion. Okay, while Dassault Aviation is valued at, make a guess, a mere $6.7 billion. So where is $41 billion for the Hindustan Aeronautics Limited? And Dassault, as you can see, it has more revenue and more net profit, yet it is trading at $6.7 billion in the international markets. So you can say that it's the India growth story, and the import substitution, which I all agree, and I give credit to Modi government, and this is one thing really I give him top credit. They did something very good, and I'm sure whoever is there will admit that this was something that was really needed in India, and they have really caught the right thing. So all credit on this front. But do remember that over the next two years, Dassault Aviation revenue to earning is expected to grow at a compound annual growth rate of around 24 percentage, while that of HAL is expected to grow by about 13 percentage. All right. So you have that even when you, but then there's a big order backlog in the case of HAL, which is tremendous by any means of comparison. Yet you find that Dassault exited its recent fiscal year with a backlog of $41 billion, while Hindustan Aeronautics Limited a backlog is around $11 billion. So even that Dassault Aviation is more. All right. So if you come to the future opportunities, then that what people are telling is that not just India, but many other countries are on a significant rearmament cycle given the current geopolitical dynamics. Now, if, for example, Donald Trump, as it is beginning to look likely, comes to power, then he's saying that he will withdraw support for the and ask NATO to foot the larger bill towards Ukraine, and he would not like to support, or rather, United States would like to support Ukraine much less. So NATO would have to fend for itself and contribute a larger piece of the pie. So you may find that many other European countries may want to rearmament themselves much more. So it's not just that India is going to do it, other countries are also going to do it, okay? And which could last for a decade. So, and according to the German IFI Institute, Europe saved $1.8 trillion on defense from 1991 to 2023 by underspending NATO targets. Now they need to catch up with Donald Trump ringing loud, and he's looking to be nearing the whatever. But although this story I will not cover in this video, that chances of who could make it and all that we will address. But at this point of time, I'm just talking of. Now, so if you compare shipbuilders like Mazagon Dock with the largest warships builder in the United States, for example, you have the Huntington Ingalls. Okay, that's the largest warships builder in the US. Mazagon Dock has an enterprise value of $12.03 billion. That values it almost as much as Huntington Ingalls, although its revenue at present is less than 10% that of Huntington Ingalls in the US. So you can imagine that the valuations have gone beyond sky high. Stocks are worth the net present value of the future cash flows, as you know, which cannot by forecast, it cannot be forecasted perfectly, but the debate on fair valuation will always be never ending. And when the stocks continue to move on, no significant news, then outpace their business growth and trade at valuations which are totally incomparable with the global peers, then that does sound some sort of a warning bells. Be a little cautious. I don't think these are good to invest for the long term. Short term, yes, there will be some more news and that may be helpful, but be a little careful when you take out your money tomorrow. I'm not, by tomorrow, I don't mean literally tomorrow, right? Near term, as I said, that there may be still some more steam left. But yes, be a little careful. These valuations look to be a little uncomfortable and going a little out of comfort now. All right. So very, very cautious you need to be. And yes, we do have some benchmarks as to where these valuations can trigger a correction. Okay. Do join our Premium Plus, which gives you almost 2 weeks predictions in advance, plus some good multi-bagger stock recommendations for how you could benefit out of the budget, what lies ahead, things like that. And you can get in touch with us at the WhatsApp number is 9820861044. You'll be ready with not only the market timings, the outlook for the market over the next few weeks in Premium Plus, but also the good multi-bagger recommendations, which stocks are likely to do well over the short, medium and long term. And of course, every day we will be carrying the stocks of the day we are already carrying and stocks of the week. So Look forward to hearing from you on 982 086 1044. Happy investing. Take care. Bye bye.